BOJ to keep ultra-low prices. Sound warning over vulnerable yen. Tokyo. The Bank of Japan is likely to hold ultra-low interest charges on Friday and pressure its solve to help a delicate economy with huge stimulus, a flow which can similarly weaken the yen by way of highlighting a policy divergence with the rest of the sector. While a modest, technical tweak to its yield cap or steerage on the future coverage path cannot be dominated out, the BOJ is visible sustaining its big financial aid for now to make sure the economic system is completely out of the doldrums. Central banks throughout Europe raised hobby quotes on Thursday, a few via quantities that shocked markets, inside the wake of the U.S. Federal Reserve's 75 basis point hike. The chance that Japan will stay an outlier whilst worldwide principal banks tighten coverage to combat inflation has pushed the yen right down to 24-year lows, threatening to cool intake through boosting already rising import costs. But growing issues over the vulnerable yen have now not deterred the BOJ from defending an implicit 0.25% cap for its 10-year bond yield goal through ramped-up bond purchases. At the two-day coverage meeting finishing on Friday, the BOJ is extensively anticipated to keep its 0.1% target for short-term prices and its pledge to manual the 10-year yield round 0%. The vital bank might also deepen its solve to protect the 0.25% top restriction via targeting a much wider variety of debt maturities for its limitless fixed-rate bond buying operation, which presently covers best 10-year bonds, a few analysts said. The BOJ may want to upload a pledge to Behavior Emergency Marketplace Operations targeting notes for a wider variety of maturities, said Hiroshi Ugai, leader Japan economist at JP Morgan NYSE, JPM, Securities. The valuable bank has no preference but to do that to govern bond market actions, although it probably would not want to boost up the greenback's rises towards the yen, he said. The BOJ's yield cap has confronted attack by investors having a bet the crucial bank should deliver into global marketplace forces, as growing U.S. yields push up long-term quotes across the globe. The BOJ is caught in a catch-22 situation. With Japan's inflation well under that of Western economies, its attention is to help the still weak economy with low quotes. But the dovish coverage has triggered sharp yen falls, hurting an financial system heavily reliant on fuel and raw material imports. Some marketplace players speculate the BOJ may want to boost its yield target or the implicit cap to gradual the yen's decline. BOJ Governor Haruhiko Kuroda has repeatedly stressed the want to keep hobby quotes ultraloose, and that the principal financial institution might not goal exchange rates in guiding policy. Prime Minister Fumio Kishida appeared to defend Kuroda's stance. In a news convention on Wednesday, Kishida said the BOJ will possibly bear in mind various factors except yen moves, together with the impact on small corporations' borrowing costs, in placing coverage. Kuroda is probable to warn against a weak yen at his post-meeting briefing, which includes by highlighting the damage the foreign money's sharp falls may want to inflict at the economic system, analysts stated.